Me, I came late, bro.
You're gonna watch the recording, my brother.
Yeah, I must wait for the recording because
Yeah,
I was caught up.
I'm gonna upload it soon. There's one thing guys,
Okay,
I need to tell you in regards to the Fib levels. One thing you must take note of the Fibonacci levels. Say you've got okay, let's say we've got this is what AUDUSD, right?
Yeah.
For you to understand where the market is gonna retrace or where the market will turn, right? Yeah, of course, the levels that I use on my Fib levels, they are not the default levels, but I'm going to show you here with the default levels. The ones that I use, they are from ICT. I use the ICT Fibonacci levels. So, for instance, on AUDUSD, right? Let's look at that week from 29 October to 2 November, right? If I put my Fib levels here, from the lowest point to the highest point of that week,
yeah.
you see, the lowest point to the highest point of that week. What you need to understand is the 38% level and the 50% level. They are quite ideal. Say you are in an uptrend and then market retraces back to 38%. That's the market giving you a picture that the market is breathing before it continues with the uptrend. Look, I put my Fib level. Look at I'm giving an example of the week of 29 to 2 November. This low to this high. Now, prior to this week, the following week to open, look what market did. It retraced back to the 38% level, and then it shoot back up. That would have been a trade. You see?
Yeah, very nice one.
That would have been a good, nice trade from you would have derived that trade from the Fib retracement 38% level. So the same thing we are looking to do this week on AUDUSD. We are looking for the same thing to happen. Where's my Fib levels? The lowest point of last week to the highest point.
Yeah.
So now this price level becomes important. Okay, this is a month. This is a month. I need an hour. I need an hourly chart. Let me clear up. And then I go to a 1 hour. Right. Let me get rid of this. Now. Then I go to my lowest point of last week to my highest point of last week. Right. Can you see where the 38% level is, guys? From last week's low to last week's high. Remember, AUDUSD is bullish, right? AUDUSD is bullish. Weekly, it's bullish. Now, look where my 38% level is. The 5-month support level. This is a 1 hour chart, guys. Look where the 38% level is. It's at this high. You see this high here? If it retraces back 38% level, that's a good opportunity to go long.
Long.
You see, market would have retraced much better for it to breathe, and then the trend continues, the uptrend continues. You understand what I'm saying, guys, right?
Yeah.
Look, even last week. Let me put my Fibs from last week's, not last, this week. That's the one we're gonna wait for the retracement to the 38% level. It's this week, the last week. Now look at the previous week before that. I'm gonna put my Fibs from the previous low to the highest of that week. Now look what was happening in the 38% levels. Look what was happening. Look at this whole noise here. You see, market was coming down there. It couldn't break the 61%. It pushed it back up, comes back. You see, there was a lot of noise here. Can you see? But eventually, what happened? You see, look, eventually it came back to the 50% level. You see the level that I've highlighted there?
Yeah.
You see this level? Now,
Yeah.
now look to the left. Look to the left of the chart. There. That price level couldn't hold. Look to the level of the chart. To the left of the chart. Look at this candle here. This bullish candle here. It eventually got respected here because they couldn't break.
Okay.
Because market couldn't break this level to go down. Look, 50% level. Of course, even if you had entered at the 38% level, if you had put your longs from there, where were you going to put your stops? Below this low, you see? So your stop loss wouldn't have been hit. It wouldn't have been touched. But your patience would have been tested also. You see? Your patience would have been tested because market was just up and down.
Yeah, true.
Yeah. So from this week that I'm highlighting, the lowest point of that week to the highest point of that week, 38%, 50% level retracement, you go long. So that would have been a trade from last week. Same thing happened.
Oh, nice, man.
You see, same thing happened. Let me remove this quickly. Let me remove this. It's easy, guys, but we tend to complicate things. It's very easy. Let me remove. You see, the previous week. Now I'm gonna work with this week here. Look, I put my standard fib levels. I put my standard fib levels from the low of that week to the high of that week. You see? Now check. 38%, 38% retracement. Go long. Can you see? Market retraced here to the 38% level.
Yeah.
And then it shoot up. So the past 2 weeks, excluding this previous week, now we are waiting to do the same trade in this coming week. We're looking for the retracement of last week's bullish move. We're looking for that 50 or 38% retracement of last week's bullish move for us to go long again. Because we know that AUDUSD now, market structure is now what? Bullish. You see? So expect the 38% level or the 50% level to be touched during London Open, either tomorrow, Tuesday, or Wednesday. Expect that retracement to happen before market continues
But
uptrend.
yeah, but I have a question, Ivan.
Yeah.
On your retracements,
Yeah.
When you're doing your Fibonacci, it doesn't mean it will only hit 38 or 50. It might hit 60 something also, ne?
Yes.
Like 61.8.
Yeah. The moment it goes to the 61.8 level, the moment it goes there, you must take note of where price is, what price action is doing, what level is it touching. Because normally when it retraces all the way back to 61%, market is like at a place where it can break a resistance or it can break a support. You see, market structure could change.
Okay.
Yeah, that 61% level.
Okay, but
the 61% level, normally that's when market structure changes, when market retraces that far.
Okay, so normally when market bounces, the stronger ones are 38 and 50.
Yes, the strong ones are 38 and 50.
Okay, nice.
Those are the strong levels for you to look at opportunities to continue with the market in its direction. Because remember, first things first, higher time frame, you must decide where the market is. Is market bearish or market is bullish? That's the first thing that you have to do on a weekly time frame. Decide whether the market is bullish or the market is bearish on a weekly time frame.
Yeah.
From there,
through a higher time frame.
Yeah. Then you dive down now into D1 and H4. Then you see how market is behaving on those time frame. then H1 for your entries. Then you forget about the noise that happens on 15 minutes, on 30 minutes. You forget about those because they're not going to affect your goal. They're not going to affect your analysis on a higher time frame.
Yeah, okay. Nice one.
Because you see here, AUDUSD, you see all the noise that was happening here. It didn't affect this price move eventually. It didn't. Because market was bullish. AUDUSD weekly market is bullish. So
it's bullish.
Yeah. AUDUSD, if you look on a weekly, market is bullish.
It's reversing.
Yeah, it's reversing from that strong. Yeah, can you see? Market is reversing from these levels.
Yeah. I on the weekly, yeah. Exactly.
So market is bullish on AUDUSD. So that's one thing that you have to take note of, guys, when you are doing your entries now on your trading. Look at those retracement levels, especially the 38%. But for me now, I use the ICT's fib levels. There's what he calls the sniper entries and all that crap. I'm sure you guys, I'm sure I've given you those videos. Those are much better fib levels to use because they're exactly to the point. But I'm sure you've
nice.
Yeah. So that's the whole idea, guys. You determine your market direction. AUDUSD is bullish. If we had done the same thing, even here, you see, we go to the highest high. Look, this time that was the first. It retraced to the 61%. Then it eventually went higher. You see, from the first week of no, it's not on the 12th and 13th November. That was when the market really turned. It retraced back all the way to 61%, but it eventually shoot up. But if you do the same thing that I've been doing the following day, let's say 13 November to 14 November, you do the same thing. You put your fibs, lowest low of that day to the highest high of that day. You look for the 38% retracement level, your entry, you go higher. You understand?
Ivy.
Yeah.
Yes, nice one.
Ivy.
Yeah.
I also looked at this one, but I'm observing some elements which I did not take into consideration. Like what you are saying that the market is now bullish. I didn't know that element, but I'm seeing the same pattern which is gonna retrace to 73007. I also indicated that likely to get in those areas, but I didn't know that the market is bullish, and I don't know how it is bullish. But now I'm seeing some patterns which you indicated.
Yeah,
I'm on the same page.
The other way you can also determine market direction from a weekly time frame. There's a folder that I shared, guys, by ICT, the precision trading, whatever. I shared it on the Google Drive. If you watch the first video of that series, ICT determines the direction on a weekly time frame. He uses the moving average number 9 and number 18. The 9 and 18 moving average, EMAs, exponential moving average, they help you to determine the overall trend direction on a weekly time frame. Let's say, let me see if I can quickly show you here. I go to my weekly, then I'm gonna insert trend, moving average, exponential. I'm gonna put 18, which is blue. Then I'm gonna go. This is just to help you determine direction of the market. Then I'm gonna put number 9. I'm gonna make it red. Can you see what's happening on a weekly? We've got the 18 and the 9 EMAs. These help you in determining the direction of the market, can you see what's happening? The 9 is now being drawn towards the 18, pointing upwards. Now look what happens here. Look what happened here. Look what happened here. Can you see those 3 places that I've highlighted? Can you see those 3 places? Is there anyone here, guys? Hello? Guys, can you hear me? Okay, seems like no one is here now. Eddie, can you hear me? Eddie, are you there? Skumbuzo, can you hear me? Brighton, I can see you're talking, but I can't hear you. Okay, I can't hear you guys.
I think I'm not. Yeah. Now I can say it.
All right, can you hear me, guys?
Yes, I'm connected now.
Right. What I'm saying in terms of market direction, you can use the 9 EMA and the 18 EMA. I don't know. I think I was talking to myself for a while there because no one was responding. Now, look at the levels that I've marked. You see this level?
Yeah,
This level, and we've got this level. Now, look what's happening. The 9 EMA, which is the red line, on our current market price, the 9 is now moving towards the blue 18 EMA, and they're all pointing upwards. That in itself tells you that the market is now bullish. That in itself tells you market is now bullish. Look, the same thing happened here. Same thing happened here. Same thing happened here. You see? So if you want to determine the market direction on a weekly time frame, you must use your 9 EMA or your 18 EMA. The moment you see the weekly candle closing above or below, you see like this candle, it closed above, it opened lower than the 9 EMA and it closed above the 18 EMA. That's a clear sign of bullish price movement. You see, momentum is strong going to the upside. You see, because it's gonna take a lot for this blue line and this red line to turn down. It's gonna take a lot. And prior to that happening, market would have moved all the way probably up here for them to start turning down. Yeah. On a longer time frame, on a weekly time frame, it takes a lot for, look, prior to this week here, if you look at the thing, the 18 and the 9 EMAs, they didn't move much. They only moved this much. You see? So I'm expecting the price to keep moving higher because of where this candle closed. It opened below 9 EMA and then it closed above the 18 EMA. The same thing happened here. And you see here, it opened below the 9 EMA. It closed above the 9 EMA. And what did the market do? Pushed up. Same thing happened here. It opened below the 9 EMA. It closed above the 9 EMA. Market pushed up. Can you see, guys? Same thing happened here. The same thing happened here. Opened below 9 EMA, closed above 18 EMA, market pushed up. if you
Okay.
if you do it the other way around, this was bullish. If you do it the other way around, market opened above the 18 EMA, market closed below the 9 EMA, market tumbled down. Can you see? The same thing happened the other way around. So this now, it helps you to determine the direction of the market. Once you have done this now, you see, like once you have done all this, okay, we have determined, okay, market is bullish. Now we forget about the 18 EMA and all that. You see, we already know now that market is bullish. Now we go down to a daily time frame. You go down to an H4 time frame. You see? Then you start hunting for entry levels. Where am I gonna enter this market? You see? Where am I gonna enter?
I got it.
I hope you can hear me, guys, because I can hardly hear anyone talking here. I hope you can hear what I'm saying. Yeah.
I can hear you.
Okay. So that's much about it. That's what I wanted to tell you guys about the Fibonacci levels. So we've got two markets that we're gonna be looking at this week: EURNZD and AUDUSD. The moment I see favorable entries for our long position, I'll also notify you guys in the group. And then if there's any other pair that is gonna come up, because we have to wait now for market open to see if there's more opportunities that are gonna come in other pairs, I'll gladly let you guys know.
Thank you, Ivan.
Yeah. So Skumbuzo, please, man, stay away from the cable. Skumbuzo, stay away. I know it's good to trade, but please stay away from the cable. It's not favorable at the moment. The cable is not good at the moment, and towards the end of November, beginning of December, you know, most institutions now, financial institutions, they're gonna go on a shutdown. So a lot of things can happen in the market. Stop losses on a higher time frame, it can happen. So people get wiped out. So you must just be careful. Yeah. Must just be careful, because market is gonna die down now, because it has moved. Of late, market has been moving since the beginning of, I think, September or something. Market has been trending so much such that it has to die down a bit during the festive period, especially December. I don't think the moves that we are seeing right now, we're gonna see them in December. We won't see those moves. We're gonna start seeing those moves probably like February or something. Yeah, so you must just take note of those stuff. It's stuff that will help you when you're entering your positions, because market is gonna start ranging now. You see this? This is gonna be a daily occurrence now in the market in the coming month, because there won't be liquidity. There won't be volume in the market, because when the big guys shut down, there's no volume in the market. So it's things that you should just take note of, because today's trading is not going to be the same as tomorrow's trading. So it's things that you have to take note of. Right.
Don't forget to share the video. Don't forget to share the video.
No, I'm going to upload it now as soon as I'm done with this webinar here, because I can't upload while I'm still on the Zoom. I can't upload it. So the moment we're done, I'll upload the video.
Thanks.
Mr. Brighton, are you there? Brighton.
I'm here, my guy.
Hey, what's up? What have you got to say, my guy?
Yes, you know, this is my first real session, so yeah. I've been learning. I've been learning. In the next session, I'll be the one who'll be talking. You guys will be quiet.
Nah, that's good. Yeah, it's good. It's good to communicate.
Yeah. No, I'm learning, my guy. I'm seeing everything, how it happens here. No. In the next session, I don't worry. I'll be there listening and talking all at the same time.
No, that's good. And
Sure,
Clive,
my brother.
see, Clive is there, but he's just quiet. Clive, are you there? I doubt if he's even gonna say it.
you, bro.
You there? Yeah?
Yeah. I'm just waiting for Mr. Piplo to talk.
Mr. Piplo, I don't know where he's gone now. We are left with Mr. Kebo here, Mr. Skumbuzo.
That cable I can see even on BBC. They are talking about small firms fed up with Brexit. It might happen something this coming week.
Yeah, the cable is not good at the moment, Skumbuzo. You must stay away. Oh, by the way, when are you coming to Cape Town, Skumbuzo?
Yeah, I think mid-December.
Yeah, because I'll be around, my brother. Don't worry, I'll be around.
Okay, I'll find you guys in Cape Town.
Yeah.
I hope
we'll be around. No worries, we'll be here.
Yeah, there's one thing also I wanted to say there.
Yeah.
According to that you have been mastering to people there by entry levels, the people mustn't use like one time frame like H1 or H4 or what. You must go through like all time frames to get your entry levels.
Yeah, of course.
That helps also.
Top-down analysis. They know already top-down analysis, most of the guys here. Yeah, most of the guys, they know already. I'm really impressed with Eddie. Eddie's been less than 2 months. But yo.
Yeah.
He's catching. He's catching. The way Eddie's progressing is quite massive. I'm really impressed with that.
Yeah.
Though his network is bad.
Yeah. The network is on weekend mode.
Anyway, guys, have yourself a great evening, guys. We chat tomorrow.
Thanks, my brother.
Yeah.
Thank you, Ivan. Good night, guys.
All right, Skumbuzo.
Night, guys.
Keep well.